Hello everyone, this is Dr. Mihir Shah once again with another video. In this video we are going to learn how to calculate the future payoff problem sum under the topic hedging, under the subject commodity and derivative market. Again, a very important video for all the TYBMS Sem5 student. In this video we are going to take up multiple problem sums whereby we'll understand how to calculate the future payoff under hedging. So what are the formulas that are required to be noted down, and what are the steps in order to create the payoff diagram? All that will be covered up in this particular video. So let us see what are the ways, what are the problem sums, and what are the method to calculate future payoff under hedging under the subject commodity and derivative market. Again, a very important video for all the TYBMS Sem5 student. Okay, now let us see how to solve sums based on hedging where we have to calculate the future payoff. Now in order to solve the sum, we'll first go through the steps. Okay, the steps are as follows. Okay, first step, we need to note down the contract price. Now the contract price can be anything. It can be either buying price or selling price depending on the question. Second is settlement price. Again, it can be the opposite of buying and selling. Okay, so if my contract price is based on buying, my settlement will be selling. If my contract price is based on selling, so my settlement price will be based on buying. Okay, so if I buy, I have to sell in future. If I sell, I'll have to buy in future. Okay, so that's contract price and settlement price. Third is profit and loss is equal to selling price minus buying price. And lastly, the total profit and loss will be nothing but your profit or loss that we have got from step number 3 into the contract size. Okay, so 4 steps we need to follow very carefully. Okay, now based on this step, we will start with the very first problem sum. We'll read out the question first. It's given that Jay takes a position in future market by selling Reliance future at rupees 720 at an expiring rate at the final settlement price was 800. Calculate the profit or loss made if the contract size was 100 and also draw the payoff diagram. Okay, now in order to solve that, we'll go as per our steps. Number 1, we will have to note down the contract price. So now contract price, now check whether you are buying or selling. So it's given here, he takes a position in future market by selling. So my contract price will be made out of selling. So I'm selling right now. So contract price is nothing but my selling price. Okay, and thereafter it is given that, so if I sell right now, in future my settlement price will be based on buying. So step number 2, the settlement price. Okay, so I'll note down here that the contract price is rupees 720. Settlement will be based on buying. So my buying price will be rupees 800. Step number 3, I need to find whether I've earned a profit or a loss. So profit or loss is equal to selling price minus your buying price. So my selling price was, the contract price in this sum, so it is 720 minus 800. So 720 minus 800 will give you negative 80. So thereby we have incurred a loss of rupees 80. So if I have, this is a loss on one contract. Okay, so now we need to find lastly the total loss. So the total loss will be loss per contract into the number of contracts. So here is given the contract size. So they have taken only one contract, but that one contract size is of 100 units. So it will be 80 into 100, which will be nothing but rupees 8,000. So our total loss in this particular sum was rupees 8,000. Now the same thing we need to draw it out by making a payoff diagram. So see, very simple. We'll first note down the y-axis and x-axis. Okay, now remember, on your y-axis, the above part will consist of profit. The bottom is made up of loss. Okay, we'll start with 0. Now since the loss is of 80 per, okay, we have to go with the per unit. So what I'll take here is, we'll take 40 ka gap. So it will be, you have 40, you have 80, again you'll have negative 40, negative 80. Okay, now see, very simple, how to draw the payoff diagram for future payoff. Okay, the sum based on future payoff. Whatever is your contract price, mark it up. So let's say this is my 720 ka contract price. After that, check your settlement price. Now it is more than 720, so I'll just mark it out somewhere here, 800. Now on the date of settlement, we had a loss of 80. So at the date of settlement, we had a loss of 80, so I'm marking it out. The dot where I have marked out the loss which has been marked on the settlement date, from that point we'll have to draw the curve passing to the contract price. So here is our payoff diagram done. This is my payoff diagram, and this was based on Reliance future. So this is my Reliance future. So this is how we have to draw the payoff diagram. Very simple. Okay, now this was the first sum. Now we'll jump to the second sum. Okay, where we'll be learning now what if there is buy and sell in the same sum. Okay, so now let us see second sum. I hope everyone has understood the very first sum. Okay, now we're going to start with the very second sum. Okay, now here we jump to the next sum, the second sum. An investor takes position in future market through the following transactions. Number 1, so there are two parts here, A and B. So let us first solve the first part, that is part A. So we are going to do first the part A. Now the part A reads out that the investor buys 6 contracts of Tata at rupees 2000 with a lot size of 200 units, which expires at a final settlement price of 2150. Calculate the profit or loss and also draw the payoff diagram. Okay, so we will follow our steps. Number 1, contract price. Now in this sum, the contract price is based on buy, so we are going to basically buy. So we will note down here, this is nothing but my buying price. So we are buying it at rupees 2000. So if my contract is based on buying, my settlement price will be based on selling price. So here my expiry date ka settlement rate price given is rupees 2150. Step number 3, I'll have to find the profit or loss. That is nothing but selling price minus your buying price. So our selling price here is 2150, that was the settlement rate, less your buying, so buying was 2000. So hereby we have made a profit of 150 rupees. So I'll note down here, this is my profit. So now this is the profit per contract, okay, for 1 unit. Okay, so now here it is given that that investor buys 6 contracts, and in each contract consists of a lot size of 200 units. Now this is a profit on 1 unit, so we now need to find the total profit. So the total profit will be profit per lot, not even per lot, per unit into the lot size. Now here the lot size was 200 units, and in that way you have purchased, or you have bought 6 contracts. So 150 was the profit, 200 is the lot size per contract, and there are 6 similar contracts. So the total profit will be 150 into 200, which comes to 30,000, and then 30,000 into 6 will give you rupees 1,80,000. So that's the total profit which was earned by the investor by buying 6 contract at 2,000 and on the settlement date selling it for 2,150, having a lot size of 200. Now again the same thing, we need to draw the payoff diagram. Very simple. Again, we'll first note down the y-axis and the x-axis. Remember, the top part will be related to profit, the bottom is related to loss. Okay, the profit is 150, so what we'll do, we'll note down 150 on top. Similarly, we'll take a loss of 150 bottom. Okay, the contract price was 2,000 and my settlement was more than 2,000, so I'll write it here, 2,150. Now on the settlement date we had a profit, so we'll mark the profit. Now the rule is wherever you have marked it on the settlement, from that point draw a curve passing through the contract price. That will be our payoff diagram. Okay, so this is the payoff diagram. Okay, very simple. Now that was the part A of the sum. Now let's see the part B of the sum. Again, point number 1, we'll just note down the contract price. Okay, now we read out what is it all about. You sell 5 contracts of HDFC Bank at 575 rupees with a lot size of 100, which expires at rupees 565. Okay. So now you're selling. So I will start with selling price. So my selling price was rupees 575. So if I'm selling start May, on my settlement date I'll have to purchase or I'll have to buy. So my settlement price will be based on the buying price, which is rupees 565. So third, I'll have to check whether I've earned a profit or loss. So profit or loss is equal to selling price minus buying price. So my selling price is, in this case it was 575 and my buying price will be 565. So hereby again I'm making a profit. I'm making a profit of rupees 10. Now that is per 1 unit. So now we have to find the total profit. So the total profit is nothing but profit per unit into the number of units in a lot. So it's given a lot size of 100. And check how many contracts were there. There were 5 contracts. So 10 into 100 is 1000. 1000 into 5 will give you a profit of rupees 5,000 in total. Okay, again a very simple sum. You just have to follow the steps and apply the formula. That's it. Now again we'll have to draw the payoff diagram. Again in the simplest way. We draw the x and y axis. The top part is called as the profit. The bottom will represent loss. Okay, here the profit is 10, so I'll just note down on top 10 and bottom में negative 10. The contract price was 575 and my settlement was 565, so that is lower to that, so it will come on the left side 565. On the settlement date I had a profit of rupees 10. So wherever I got the profit, from that very position we'll draw a curve passing to the contract price. This is nothing but a payoff diagram. Okay, this is of HDFC Bank, so I'll write HDFC, and the previous one was based on Tata, so I'll note down here as Tata. Okay, so this was the second sum where we had a buy and a sell contract, and how you have to solve that sum. Okay, the procedure is same, you just have to follow the same steps. Okay, so with this our second sum gets completed. Now there's one more sum that we will be covering up under the same topic. Okay, so now we'll start with the third sum. Okay, now this is our question number 3. I'll read out the question once. It is given that Raju believes that the stock price of Reliance will go down. He sells 10 future contract expiring after 3 months. The lot size of each contract is 400 shares. The short position is taken at a future price of rupees 270 per share. Find out the possible gain or loss on the position if after 3 months the spot rate moves to 260 or 280. So again, two conditions are given. First, we'll solve the first A part. Again, steps remain the same. We'll start with first contract price. Now again, we need to figure out whether it is a buying or a selling. Now I'm going to say it's given that Raju sells. So we write here this is nothing but my selling price. So we are selling it at 270 rupees. So if my contract is based on selling, my settlement will be based on buying price, which is rupees. Now in our first condition the amount is 260, so we'll note down at buying price is 260. Step number 3 is nothing but our profit or loss. So profit or loss is equal to selling price minus buying price. Selling was now here at 270, but my buying was 260. So hereby again we are making a profit of rupees 10. Okay, now that is per share. So we need to find the total profit. So total profit is profit per share into the number of share per contract. Okay, so here is given the lot size of each contract is 400 shares into the number of contracts that you have taken. So here is given he sells 10 future contracts. So into 10. So 10 into 400 was 4,000 and 4,000 into 10 is rupees 40,000. So our total profit is rupees 40,000. Again, same sum, same way you need to solve, very simple. Okay, chalo, we'll put that in our diagram. So again we will make our x and y axis. Okay, the top part is nothing but our profit. The bottom will be our losses. Okay, there was a profit of 10, so we note down 10 and just negative 10. Contract price is based on 270 rupees and my settlement is 260, so it is less than 270. On my settlement we made a profit of 10, so we marked it. From that point we will be drawing a curve passing through the contract price, and that will be our payoff diagram. This is Reliance ka future, so Reliance, okay, and this is my payoff diagram. Okay, very simple. Now chalo, the same thing we will replicate for part B. Again, number 1, contract price. Now the contract price here again it is same. It is based on selling price because here he has sold for rupees 270. So on settlement date we will have to buy, so it will be based on buying price. So my buying price is rupees 280. So third point, profit or loss is equal to selling price minus buying price. Selling was 270, buying is 280. So here we are making a loss. Here we are making a loss of rupees 10. Now that is per share. So now we'll have to find the total loss. So the total loss is loss per share into the total number of shares into the total contract or the number of contracts. So here we have 10 into 400, which is 4,000 into 10. So in this case we are having a loss, a total loss of rupees 40,000. Okay, same. Okay, no changes. You just have to follow the steps. Now chalo, last step, we will be making the payoff diagram. So here we have our x and y axis. The top part is our profit, the bottom will be our loss. Now here we are making a loss of 10, okay, so profit of 10 and loss of 10, okay. Now my contract price was 270, but my settlement was 280. On my settlement date, we made a loss of 10, so I'm marking that point. From that point, we will be drawing a curve passing to the contract price, and that is nothing but a payoff diagram. Okay, so with that, we have completed solving our third sum, which is based on the chapter hedging, and the problem sum will be known as calculating the future payoff. Okay, I hope everyone have understood all the three different types of sum that we have taken. Again, a very important topic. This consists of around 7 to 8 mark in your paper. So with that, we will end this video here. I hope everyone have understood. Thank you.